Good morning. It's Monday, July 29th. What's up? First off, that's it. Nothing more. I'm back to regularly scheduled program, except I'm leaving on Wednesday. So I will probably not be doing a podcast on Wednesday through Friday this week. I'll be working another game in the lovely Columbus, Ohio, everyone's favorite summer destination. So if last time was any indication, I probably won't have time to do stuff. I'm hoping that it's going to work out a little bit better, and I'm not doing 16 to 20-hour days. But if you have any questions, you can always email me. Here on Linktree, there are contacts everywhere. So if you go to Linktree, linktr.ee/dailystockpick, it's where all of the stuff, all of the tools that I use, they're there. But you can contact me on email. You can contact me on Facebook, on Instagram, on X, on Twitter, Vaz, whatever you want. But just find a place to settle, and question me. I take social requests on Spotify if you want to comment down there. If you have the comment feature, it's been causing some people some problems. But yeah, I've also got a newsletter that is completely free during the week, and you can always comment or direct message me there. I don't care. Whatever you want to do. If you have any questions, hit me up. This weekend, I did provide a substantial complete look at QQQ DIA, which is my favorite Dow Jones ETF, and IWM. Those are indexes. I also provided an in-depth look at Apple, Amazon, Microsoft, and I told you what price to buy Meta. Just spoiler, it's under $500. Just buy the damn thing under $500. I don't know if this earnings, if he's going to come out and spend. There's some stuff that I put in there, but just buy it under $500. That's it. But in order to pay the supporters, and again, the paid newsletter subscribers are my biggest supporters. I really, really thank them. I think I provide a good job. I got some super positive feedback on the actual newsletter. And so Sunday I did a special podcast. And it's exclusively on Substack, dailystockpick.substack.com. Substack had asked me as a top podcaster to try and do an exclusive podcast through them. I said, nah, I kind of like doing it for free. This seemed like a great opportunity to thank my supporters on the newsletter, and B, provide Substack some type of bonus so that they continue to like me. So let's look at the Qs. Where are we? We've broken down below that 480 support level. Right now in pre-market, you're trading at 465. It's up 0.6. My expectation is we will probably see that be brought down when the market opens. Your MACD is low. Your RSI is low. It is what it is. Honestly, it is what it is. You're using that 200-day, which is at 455, as your ultimate support level. Think of your support level as a flash flood. It's right up next to your thing. If we break down below that support level, you're going to have to find some place to climb out of that ditch because the water level is too high. The algorithm got you out with a nice 13% gain. It hasn't gotten you back in. I talk about this a lot. Buy into strength, not weakness. So, this is a downward trending stock. If you want to know more about my process and when to buy and when to sell, I've got an education section right here. Okay, it is fantastic. It tells you everything that you need to know about my entire process. Right now, we're not seeing confirmation here. We're seeing the 200-day look right there, use as support. The 50-day starting to turn negative. The Bollinger Bands are wide open. You have to have patience. Now, do you want patience through an earnings week that could potentially pop? You have to have exposure. Honestly, this week, have exposure. Just don't start adding nilly-willy, because look at the weekly. We're starting to see a little bit of a pullback. It's only 3 weeks of a negative pullback. Now, you could see a pop back up to 475, 470, somewhere in that neighborhood. The MACD still super high. Check out the last time we saw the MACD this high. It took from July 31st all the way until October 23rd to actually turn around. You had a little bit of pop in there in September. A little bit of pop, nothing big. But if you added during that pop, were you upset? Well, you got into October and you're like, what the F did Gary tell me? I said be patient. You have to be patient. Again, we've seen IWM outperform. I go over all of that in the newsletter. But the Qs, it's my go-to. It's my baby. So let's talk about some stuff here. The Qs, Trendspider put it really well. Sitting at a critical trendline support FOMC meeting on Wednesday, and you've got Apple, Microsoft, Amazon, and Meta all in the same week. Enjoy the ride. Where are you going? I don't know. I have no idea. No idea. But that's where we're at. Spaces. If you follow me on Twitter, I'll be on Spaces this week. Monday at 2 p.m. Today at 2 p.m. Today's Monday. Tuesday at 3 p.m. It's all about earnings. So if you're interested, tune in. That's it. That's simple. Now, let's acknowledge that this week is going to be crazy. And this is my point. This is Alpha Picks, okay? Alpha Picks is a portfolio. If we want to look at Alpha Picks, it's a portfolio that beats the S&P. It's up 132% from July 1st to July 24th, July 1st, 2022 to July 24th, 2024. It's a buy and hold strategy. It is a one, look at that, 132% versus 46%. How do you get Alpha Picks? You get a $50 coupon when you go to my Linktree and use that third link, Alpha Picks. Now, why am I bringing this up? Because this morning, Alpha Picks said that they are selling. This is the Alpha Picks earnings seasons in full 6 of the 38 positions, having over 100% return in just over 2 years. Okay? That is phenomenal. Now, 6 of the 38 Alpha Picks that are in the portfolio have delivered, 6 of the 38 have delivered a 100% return. Since inception, it's 123%. Some AI-fueled big tech stocks are failing to meet targets and sparked the Nasdaq sell-off. These are names that I just don't know of. And one that I knew of, but they said to sell today. And this is what I want to tell you is Alpha Picks is not just about buying these names. It's an actual texting service that will allow you to look at buying and selling, but it's over a long term. This is over 2 years and 5 months since they picked MRO. This is Marathon Oil. And they suggest today that you sell. Now, the time has come to remove it from the pick. Marathon Oil was added January 3rd, 2023. Has a hold rating for 180 plus days in the quant. They use the quant rating in Seeking Alpha Premium to do this. We will release a new Alpha Pick rating, strong buy, on August 1st. But this one has come out of the portfolio. It's not August 1st. It's July 29th. They tell you when to sell during the entire month. But new picks come out on August, on the 1st of each month and the 15th. But here's the performance of Marathon Oil since they bought it. Okay? 60%. 60% over 2 years and say 6 months. 2.6 months. Your average S&P, like a great year in the S&P, is 10%. This is 2 years, 60%. Marathon Oil. Fantastic, fantastic portfolio. How do you get it? You go to my Linktree, you save $50 off the regular price. Now, this is my favorite email. If you want Seeking Alpha Premium, I save $25 off your membership by using my link in Linktree, linktr.ee/daily stock pick. It's the second link. This is my favorite email that comes out every Friday. And why? Because it sets up my week. Okay, it takes me about an hour or two to go through it and then to go through charts and Trendspider. But this sets up my week. It breaks it out by day. So Monday, we've got Volatility Watch with some options trading. Or we got earnings, McDonald's. We'll talk about that one. Welltower, and on semiconductor. We've got NVIDIA and Meta today with Jensen Huang and Mark Zuckerberg on stage together. It's a huge one. Then Tuesday, you got earnings watch. Microsoft, Procter & Gamble, Merck, AMD, Pfizer, Starbucks, all of it. Vista Outdoor. Wednesday, you've got the Fed meeting at 2 o'clock. They'll make a statement. 2:30 is the press conference. That's going to be huge. You also have Meta. You have MasterCard. You have Qualcomm. You have ARM Holdings, Boeing, which is in the core portfolio. Then Thursday, it's the big one. You got earnings for Apple, Amazon, Intel, Block, or Square, whichever one you want. DoorDash, Cigna, ConocoPhillips. You've got Data Watch. You've got OPEC. Ministers will hold an online thing. And then Friday, You got the big oils. You got Chevron and Exxon. This sets up your week. How do you get it? Well, you go to my link tree, okay, first off, and you get Seeking Alpha Premium. And it comes out every Friday. And I get a nice alert that says, hey, on Friday, it's fantastic. I sit there on Saturday morning with some cup of coffee, and I look through it. Now, let's talk about election years. Because SPY has consistently excelled in August during election years, boasting a perfect win rate and an impressive average return of 2.85%. How do you get this? Well, you go over to Trendspider, okay? These are the things that you can look for in Trendspider. And if you go over to Trendspider and you just click on the seasonality tab, okay? There's a tab down here that I have in my thing. You can set it up to look at anything that you want. Let's go back to 2010. Okay, maybe we'll go back to 2010, January 2010. And we can look at the week of the year where we see 50, 50, 50, 50, or we can go to the month of the year. Because again, I want to point out to you, it's an 87% over 15 years. It's not 100. You know, you had one down. Mean change was 2.92%. That's a pretty good, you can play one of those leveraged ETFs against SPY. Simple as that. Again, Trendspider is the tool that you want for that. Earnings week ahead. Here's an article that kind of points it out. This is Microsoft, Amazon's, Apple, Meta, Pfizer, McDonald's, Starbucks. If you want to take a look at each day and play earnings, you can do this. Remember, you have leveraged ETFs on each of these things too. Amazon, I said it in my paid newsletter. Amazon is the best buy right now of the Magnificent Seven. Just going into earnings, it's showing weakness. I've got tremendous exposure to this. I sold out at 176. I didn't wait until the 200s to actually sell out, but I sold out at 176 because I thought that 188 was going to provide a resistance level. It didn't. It broke right through it. Now it broke right through it as support. So we're looking for more support. I think with the MACD that low right before earnings, I think you're fine. And if you want to own it in an ETF, here's Amazon earnings are a blockbuster. These stocks and ETFs could get a jolt. I went over exactly what I think about Amazon in the paid newsletter. So if you want to read that. Now, I'm a big cap investor, big cap tech. 12 of the 16 information technology companies topped profit estimates this week, okay? 16 of the XLK companies topped it. Now, they topped it, but it's all about guidance. So did they guide higher? Probably not, because the quarter to date, XLK is up 2.6%. So you want to take a look at this stuff. Now, it's run so much. Is XLK a good buy? Go over to Trendspider and we can look at XLK. It is in the core portfolio. I love this ETF. Low cost. You can do more research on Seeking Alpha about it. Is XLK a buy? You've got weakness. You're using that 200-day as your support. Your RSI is coming off of oversold territory at 29. It's currently at 37. Your MACD resetting down underneath. If we look at a weekly chart of this one, it's still got strength. So could it go down? Absolutely. I don't know where this market is going, but this week will tell you where this market is going. Mind you, there is nothing in this market that is telling me absolutely we will go higher. Nothing in this market that's telling me absolutely we will go lower. We're in a bull market until we're not. And with the Fed meeting this week and earnings coming out, we're in a bull market until we're not. So those mega cap companies, if Apple says, you know what, we're seeing huge signs of an Apple iPhone refresh and we're going to make more phones. We see it huge. You know, I went over Apple in my paid newsletter. So overall last week, it was a great week for U.S. economic data. GDP rose 2.8%. PCE data this morning, this was Friday, is still healthy and inflation continues to fall. We're in a bull market until we're not. Yes, IWM may outperform over the past couple of weeks, but we're in a bull market until we're not. Now, I talked about Apple. This came out this morning. Apple Intelligence won't debut with initial iOS 18 launch. That's not good. Now, in pre-market, Apple's only down 0.5%. It's gotten a little bit hit here. Apple Intelligence is what the iPhone refresh is all about. Okay, if that doesn't come out, just means that maybe the next quarter we start to see some Apple refresh. It depends on what they put in Apple Intelligence. I haven't seen anything so far that blows my mind that says Apple is going to blow this away. But you've got good China data. You've got good India data. You've got good sales on the phones. It's pretty good data. Again, I go into depth in the paid newsletter on this one. But Apple, it's still my main core portfolio holding. It's my personal largest holding by a lot. Now, there's one that I love, Supermicro. Shai Bular goes over this one in tremendous detail about why he likes SMCI. Is this one you want to buy? SMCI is in the core portfolio. It's also an alpha pick since November 2022. That's how long they've had it. We're seeing tremendous weakness in this stock. Why? Well, if you look at the weekly, it's just pulling back a little bit. It's setting itself up. If you bought at 900 or 1,000 like I did, it hurts, okay? Because you're at 712. But look at the way this one traded sideways, only to get the bigger bump. SMCI, again, Shai goes over it. The valuation is not crazy. I like this one. I like it a lot. I still own this one even at $1,000. I am going to continue to add to this as it shows strength. I will not buy into weakness. I should be selling into weakness, but I just see this as a sideways trade. The 200-day hasn't held. Your 50-day starting to turn negative. It just had the death cross. But I like this name. The valuation does not tell me that this name deserves to be sold. We will see their earnings coming up on August 6th. This will be the first indication you have as to can this company turn from a microcap company into a large tech company, which is they're in the S&P 500. They're not huge market cap yet, but they could be moving towards that. They have a mover advantage. I think this one's an interesting one. Now, if you want to play a chipset, then maybe Taiwan Semi. Taiwan Semi, since its IPO 27 years ago, the stock has a perfect record in the month of August. Average return of 5%. And I've read on Seeking Alpha, they love Taiwan Semi, the Seeking Alpha analysts. Now, you're using the 200-day as your support. Your 50-day started to move negative. Your Bollinger Bands are still wide open. You're on the downside of that 9-day. But your MACD is starting to turn. Your RSI is coming off of oversold territory. The valuation isn't nuts compared on what they're actually doing. Again, you may want to look at this one. Now, I said on Friday, I said, you know what? Trump wants to be in the news. He hates that Harris had a record-setting money raise, okay? He wants to be in the news. Trump laid out plans for the U.S. to be a crypto capital and Bitcoin superpower. He wanted to make the news. That's it. I mean, understand, Trump hated crypto when he was in the White House. Now he sees the votes out there. There could be as many as 20 to 30 million single topic voters, and their single topic might be crypto. He knows that. Okay, so he's going after that. What you're seeing with Harris is she's now going after this too. She's trying to distance herself from Elizabeth Warren, from the president, President Biden, from Gary Gensler, who's at the SEC. They're trying to distance themselves from that. Buy crypto. Okay? I am up. MicroStrategy. Oh, this is a good one too. Trump's new crypto first mantra has investors sizing up the industry. So there's a couple of things here. I bought MicroStrategy and I bought iBit. Both of them up over 10% in less than a month. They both were July buys. I'll buy them based on the algorithm. I bought around this time. I think I bought it like 1,400, maybe 15, maybe 1,600. Once it had confirmation, I was sure it was going to buy. I will sell based on the algorithm. The algorithm makes you 667% over 24.5 months. This is back tested. So it has your buys, it has your sells. You can see it just came off this 32%. Did I buy here at 1466? No, I didn't see confirmation. I didn't see absolute. Here at 14, 15, 1600, I absolutely saw confirmation. So I saw confirmation. I bought it. This one candle here on July 25th hurt. It's up 1.14%, but it went all the way down to 1507. I think that was the day where I wound up negative. I think I may have even bought it on that day, but I'm up 10% on this one. Again, if you're playing the Trump trade, it is basically a crypto. And I also bought IBIT. Okay, there's two different reasons why I bought IBIT. It's because I wanted exposure to Bitcoin, and I bought IBIT, I think it was July 1st or something, when the algorithm told me. And you see that gap up. That gap will probably get filled at some point on the way down. So I will be trading this based on the algorithm. Now, understand the algorithm hasn't had enough time because January was the first time where these ETFs really started tracking Bitcoin. And you see that huge 50% gain in the algorithm right there. January was the time. So I haven't back tested this to January, but you're seeing 50% gain. You're seeing a loss right there. You're seeing a loss right there, but you're seeing a 10% gain. You're seeing a loss right there, but you're seeing this huge 10% gain. Right now, I would say you have an average probably of 40 to 50% gain on this just since it became a spot. One of the things that I wanted to look at, though, MicroStrategy. So how much Bitcoin MicroStrategy holds versus its actual market cap. And I found this mstrtracker.com. I don't exactly know how to look at it, but the NAV premium is what you want to look at. Okay, do your Google research, find out what NAV premium is. It's about twice the how much Bitcoin they own. So you can see up here, it went way up to 7. So we're down in these times, but it's still much more expensive than what Bitcoin is. I would say if you just want to buy Bitcoin, buy an ETF or go to Coinbase and buy Bitcoin. You can just go, the Trump trade, you can trade just a Coinbase. So I did want to just point out when I was looking at that, this is part of the reasons why I bought twice as much MicroStrategy, because I do think that one is a leveraged ETF against Bitcoin, but the valuation doesn't make sense. I will probably go into something like a twice leveraged ETF on Bitcoin. It probably makes more sense to do something like that because Bitcoin, I think, has more room to run than MicroStrategy. Again, over 1 year, you can see this chart. MicroStrategy is up 295%. Bitcoin is up 136%. So I was doing a little bit of research. So far, it looks like MicroStrategy trades at a premium to Bitcoin. That's what my notes are. I'm up 11%. Oh, here's my note. I'm up 11% on IBIT, bought on July 5th. And I'm up 11% on July 16th buy of MicroStrategy. Both based on the 4-hour algorithm and confirmation in Trendspider. So if you want this algorithm, how do you get it? Well, you go over here to Linktree and you sign up for Trendspider, okay? Say you're a big Bitcoin investor. You can track Bitcoin. You can do whatever you want, $53 a month. What happens is you go to Linktree, you sign up for Trendspider, then you email me. And I email you back links to import the 4-hour algorithm, to import the 65-minute algorithm, to import the 5-minute algorithm. I also give you all of my custom watch lists. I give you everything that you're included in the community of Trendspider, the Daily Stock Pick community. So, again, I think this trade is the most brilliant thing with the election coming up because you will, if there's 20 million voters that are voting on a single platform, a single strategy, that's it. And it's Bitcoin. So I think you're going to see that run into the end of the year. Again, the strategy works. I wanted to point out CrowdStrike because CrowdStrike, I read this article. CrowdStrike, here's the price I will buy in a major outage. And I just scrolled to the end. And is CrowdStrike a buy right now? One quote that I wanted to, the author says, while I've nibbled around $250 a share, I will only initiate a significant position if the valuation reaches 16 times sales, a $53 billion market cap, and a price near $215. Given the company's focus on achieving $5 billion in ARR by the end of fiscal 2026, this will be an absolute steal. Investors should consider the flip side of last week's CrowdStrike failure. CrowdStrike is essential to many systems, few can replace it, and the switching costs are high. For this reason, massive drop could be a tremendous opportunity for investors, but perhaps not quite yet. Okay, I bought CrowdStrike. I tried to time this one. I didn't buy this based on the algorithm. That's why I'm trying to live by the algorithm based on Bitcoin. I bought it 305. And I thought, you know what? The MACD is about to cross up here. Maybe we saw too much of this. I bought it 305 right here. July 22nd, we gap down. Well, what am I going to do? I'm going to wait for the algorithm to tell me to buy probably tomorrow. And it's probably going to fill this gap up to 280. I will add more. I think any reaction in the market is an overreaction. Okay? There are significant cost changes. You know, who Elon said he took CrowdStrike out of all they didn't have it. It wasn't a major thing. They were fine doing it. They confirmed CrowdStrike wasn't in Tesla. He doesn't like it. There's some political ties there that he doesn't like, and that's why he didn't have CrowdStrike. So I think CrowdStrike, a good one. The MACD is going to cross up. You're coming off of oversold territory. Now, if we take a look at the weekly on this one, you can see it broke down. You're still well below, but the MACD is resetting. The RSI is reset. Their earnings are coming up here on August 26th. The roll of the dice is if they can't sign new contracts or if they change their forward guidance. That's the roll of the dice. Okay, it's nothing other than that. So this one, go no-go on Trendspider. It's an indicator. I really like it. Go no-go flips bear on NVIDIA for the first time since early May. It doesn't usually stay like that. This is a daily chart. You can see this go no-go. Okay, this indicator on Trendspider, it's a proprietary indicator that they have available for you, and it tells you when to buy and when to sell. And you can see when it goes into sell, that's when you typically want to do it. Now, the earnings gap down there, that's what's killing other people, is that hey, this one may come down here because of this earnings gap. It could be an incredible weakness of forward guidance, saying that, hey, we're starting to see a pullback in spending. This could be bad. But again, fortune favors the brave. I think that's what Matt Damon said, where he took it on the chin. Now, footwear. Deckers and Skechers reported really good earnings last week. They're up significantly. I mean, Deckers is up, 0.93. It's up 6%, I think, on Friday. I thought this was interesting because On is coming out with earnings. And this was interesting. This is a great video. Okay, I'm going to put this in the newsletter, the link to this in the newsletter. I thought this was interesting because this is why Nike's actually losing market share, is because On is coming out with technology like this. It's a spray sneaker that's coming out at $300. They'll be wearing them at the Olympics. Okay, On is one that I've said, buy it under 30, sell it over 30. We got over that 30. We got over the 40. I think you can use that 35 as support level. I think you're seeing it at $40 right now. I would probably be looking to sell this one into their earnings. But again, the Olympics, this company, they probably have something on the horizon. The MACD is low enough. The RSI is low enough that I don't think I'm concerned right now that you want to get out. You don't want to sell into strength. You want to sell into weakness. You want to buy into strength, but sell into weakness, when it starts to get a little weak. Weekly, this one's above its $35. I mean, from a weekly, you've got an inside candle. This week just started out. It's, inside candle last week of 0.07%. It's just moving sideways. So the MACD's a little bit stretched, but it's always been this stretched. This is a nice range to trade in between 30 and 35. So if you want, I would stay patient on this one. I wouldn't buy into this one until the earnings come out. But the footwear stuff and this particular video, I would watch it if you're into On. It's an interesting one. I liked it. Now, we talk about stocks. You guys may be hearing a lot of stocks in the news. Mullen, this is a stock that I think a lot of people love to trade. I consider it a meme stock. I always say you want to trade a stock that is bottom left to upper right. This one is upper left to bottom right. So if we take a look at the weekly on this one, this is not one you would want to buy ever on a weekly chart. There is no reason to buy this on a weekly chart. The valuation is crazy. What did they do? They just issued more stock. They just issued 85 million shares of common stock, diluting you. This stock is, it's down 0.87%. It's at $1.14. If you want to trade this one, I think Joe has a great algorithm that he trades on this one. The 4-hour doesn't work. You have to trade this one on very short time frames if you're going to trade it. But it's just a point that, hey, if you're going to take a chance on a meme stock versus the core portfolio, you're probably going to get burned. Again, the core portfolio is free to follow. You can find it. It's 35 positions, 35 names. It is beating every index over 1 year. Okay? The Qs. We'll just go and compare it to QQQ because QQQ is up an impressive 20% over 1 year. Okay? The core portfolio is up 35% over 1 year. And this isn't even a managed portfolio. It's just 100 shares of each name that I like. Each name that I think you can trade in that is a great, great company, a good company with good earnings, with good products and good management. Okay? They get taken out of here every now and then. I think the last time I did it was March, where I did it. Boeing. I wanted to take out Boeing, but add Dell. I didn't do it. But that's kind of the process that goes into this. So, again, Mullen, I'd say if you're interested in that one, trade it. McDonald's, they reported earnings and they missed. They're up 2%. You want to know why? Because they're down 14% over the year. McDonald's, great American company. They just did their $5 value meal. All the fast food restaurants are copying them. They're down. So is this an opportunity to buy? Well, the buy was at 253 in the algorithm. It got you out. You're not back in. Okay? Your 200-day still moving negative. Your 50-day is starting to move positive. At some point in time, we get some type of turnaround in McDonald's. Is it now? Those earnings are pretty weak. But is the consumer going to make a comeback? I don't know. You look at the last time the MACD was down this low, you were trading around this time. You ran all the way up to 290. That's a great in a huge company like McDonald's. That's a good move. Do you eat McDonald's? If you eat McDonald's every day, go and buy McDonald's stock. You're under the 200-day. You haven't had a chance like this since COVID. Okay, it's under its 200-day on the weekly chart. Just go and buy it. Now, Tesla. 3M was upgraded. 3M upgraded after its huge day on Friday. I called 3M. I put it in the newsletter again if you want to do that. Tesla gains after Morgan Stanley called it a top pick in the auto sector. I told you I got out of Tesla at about 252, I think is where I sold it, after they announced that the robotaxi was done. This one needs a catalyst to get out of it. But I will tell you, the earnings are done. So the earnings are done. I think it covers this gap up to 248. Now, you're going to have this 263. If you want to own Tesla, I would wait for the algorithm to get you in. The algorithm has you out. It probably will get you in. But if you want to buy it early, I think you do have a chance to fill this gap. Now, I don't know when their robotaxi's coming out. I do think full self-driving is just, at this point, it's a joke. There's not going to be a car without a driver on the road with this software program at the current state. No way. It drives like a drunk teenager. It'll go up on lawns. It'll scrape stuff. It does better than most, but I still don't think it's ready for prime time. So this one being upgraded by Morgan Stanley, I don't know. That's Adam Jonas, I think. Let's see, traded high. Adam Jonas is a huge Tesla bull. So what's the price target on the street of Tesla? Let's go and look at this. It's a hold in all of the quant, the Seeking Alpha analysts. Everybody says it's a hold, and it's based on the valuation. The average price target is $203. You're trading at $229. So you haven't gotten the bump. Wait for the algorithm to get you in. The algorithm makes you 105%. Versus over 2 years, 24 and a half months, you've lost 13%. Wait for the algorithm to get you in. The other option, if you like Tesla, I would argue buy XLY. When XLY is a buy and you're buying into strength, on the algorithm, you make 35% over 2 years. Again, even if you wanted to buy and hold this, you still make 20%. That's better than Tesla losing 3%. And 40% of this ETF is Tesla and Amazon. So you're held up and you actually have exposure to Tesla when you get that bump. It's as simple as that. If you're watching the Olympics and you're betting, buy a betting stock. DraftKings, this could be a huge boost. I like DraftKings. I currently own DraftKings. I haven't added it during this downturn. I probably should because the only problem is the valuation. I'm seeing weakness right here. But again, I think they'll see a pop in the Olympics. I think they'll talk about it on August 1st when they report earnings. I think that's a good one. Now, education section. Steve Burns posted this quote. I like it. One trade doesn't define you. Your discipline with position sizing and stop losses do. I am not very good at stop losses. Position sizing, I'm a genius because you want to add to your winners and cut your losers. So until a stock becomes a winner, you don't want to continually add to it. Say you've got something like, even DraftKings, okay? DraftKings, great stock. But you're seeing right here, you're seeing the top that I would say is 62. You're trading at 36. You just had this golden cross, but you're seeing negative returns right now on it, and it's based on valuation. I wouldn't consider this a winner. Now, something like Amazon, we can take a look at a weekly of Amazon. I've said this is the best buy of the Mag 7 right now, in my opinion. The algorithm doesn't have you in, but you finally have confirmation above that 9-day. And you're starting to turn. You're using that 200-day as your support. When we look at this one, you add to your winners. This is an absolute winner, okay? It got over this 188. I still think that 188 is still a significant resistance level. But you have to add to your winners. During this time, from January 2023 all the way to this time, you saw some pullback. But this is a stock that I use on a daily basis to shop. To look at, I use Alexa on a daily basis. I use Amazon Prime on a daily basis. Again, add to your winners. One trade doesn't define you. You're disciplined with position sizing, and stop losses does. That's the key point. Okay, social request. William on email. He's normally doing it on Spotify, but again, Spotify's having some problems with their comment section. I've texted them. They're not very good with, kind of smaller podcasts, so I'm sure they know about it. I'm curious how you're feeling about cost from a technical perspective. I like the raise and thought that I could play it for a gap fill at 845 to 890, but macro weakening has driven it further down as fears of consumer recession grows. I'm not scared to hold this one, given how much everyone loves Costco, but I wonder if you see any short-term medium risk in the upside. Very best, and always appreciate your work. So I sold Costco. My note here. I will read you my note. I sold Costco at $845.50 on July 12th. The chart and the algorithm were why. I had alert text set up from Trendspider. That's what I love about Trendspider, is Trendspider sends me an alert and says, you want to sell this. And I set that up. For every stock that I have in my portfolio, I have an alert set. And that's why I have this when you go to Trendspider and look, that's why I have this middle enhanced portion. That's why I have it at $98 a month. The reason is because you get 100 simultaneous alerts versus 30 alerts. If you have a very small portfolio with very few names, 30 alerts may be perfect for you. But I set up my portfolio with alerts that say, hey, I want to buy Apple, Amazon, Microsoft. I want to add to it. When the algorithm tells me I want to sell, I had it set up on Costco. I knew that Costco was stretched. And that's what I want to point you to. I don't think it's macro. I think it's the PE. I think it's the growth. And I think it's just the valuation of Costco, okay? I don't think it's Costco in particular. Everybody loves Costco. And I think you're fine holding Costco. I wanted to trade it. And part of the reason I wanted to trade it is the algorithm makes me 27%. I don't have a Costco membership. My parents do. I use gift cards at Costco to get in and then buy my stuff. That's the hack that I've gotten. Yes, they will make more money because they raise their membership, but that's already priced into the stock. So when you look at this and you see Wall Street says it's a buy, well, where's Wall Street's price target? It's at 881. That's an 8% upside. But look, they have chased this stock up. So I would worry. The valuation, the PE is 51. The forward PE is 51. 51. Now their peg forward is 5.52. That's too much. That's too much. What do I want to buy? I would rather buy Walmart, which again has a 30 PE. It's just a little bit more than half. Their peg ratio, 3.63. Their growth is a C minus. Again, if we're going into a recession, and this is the consumer, this is where you want to be. This is where you don't want to be, I should say. So that's the problem. You're paying for these things. Now you look at Target. If Target's able to turn things around, they have a 16 PE. Their peg ratio is 1.72. There's nothing about this that looks bad. Now Wall Street on Target has a 173 price target. That's a 20% upside from where you are now. But Target has had some problems. Their growth is horrific. They're losing 2.43% year over year on revenues. They're making more of their money. So, when you look at profitability, it's huge. 27% gross profit margin, that's enormous in the retail sector. We go and we look at Costco, their gross profit margin, 12%. You look at Walmart, which is mainly groceries, their profit margin is 24%. So they're actually doing better. So I would worry that Costco has more downside. And the only reason I say that right now, you don't have any confirmation, the 9 days moving down. When we look at a weekly, and we see this, do you have more downside? Look at the MACD. The MACD is 51 points above the oscillator. The RSI is just coming off of 81. Okay? I would say this has significantly more downside. I would say you're probably coming down to that 50-day, which might be in the 700s by the time it gets down there. So it's at 818 right now. I would worry a little bit about it, William, but you do you, I do me. Okay? Some scans. But that's why I sold out of Costco. I still own Walmart. I still own Target. I didn't get out of Target. I probably should get out of Target based on the chart. But again, I still have a warm spot in my heart for Target. I sold half of it, I think, at 170 something, but I still own it. Scans. Exxon. Exxon is getting another leg up here. You're in at 114. I think it's $120 stock. So your upside is 116 to 120. Their earnings are coming up Friday. Like I said, oil, I think they'll do fine. I think the natural gas will probably hurt them because the price of natural gas is going to go down. KOLD, that's the next. That's a triple levered ETF on the short side of natural gas. This has been going up. That means Exxon in their natural gas business won't make money because they're not able to sell natural gas at a higher price. They have to basically cut costs. Now, a sector that got a cross up, XLP. This is the consumer staples. And if we go over here to Seeking Alpha and we look at XLP and we see their holdings, let's see. This is consumer staples and the top holdings, Procter & Gamble, Costco, Walmart, Coca-Cola. That might be one to buy instead of Costco, XLP. The algorithm makes you 4%. Buying and holding makes you 8% on this one. Costco is one of the top names on this. So I wouldn't be buying into this. Seems like it's getting another leg up. But again, you have to love those top 10 names. BLDR, PATH, VRTX, a lot of these. Bitcoin. There's a BITX, which is a double levered Bitcoin. This one was up 4% last I checked. It's up 3.32% right now. But it's just getting back to its 200-day. The algorithm makes you 143% on this. Buying and holding makes you 144. Boy, don't you wish you got in at that $30 mark under the 200-day with the death, with the 50-day starting to turn? I think you're looking at this 200-day coming back into play. Not as resistance, but it's probably going to go past there and turn into support. Leveraged ETFs. We can talk about home builders, NAIL. This is a 3-time levered. No, I think it's, this is a daily, Direxon daily. I don't know, 1 or 2 times. But look at that, 87. Okay, you're at 147 right now. 87 on July 8th. That's a huge one. You make 108%, 29 positions over 24 months. Your average win, 28%. This is home builders. This is a huge one. So again, if you want Trendspider, if you want the 4-hour algorithm, it's in there. Everything's on Linktree. Use Linktree because it saves you money. Okay, you've got Trendspider, you've got Seeking Alpha Premium, you've got Alpha Picks. Those are the three. Say you don't want Trendspider, get a charting program. Okay, Webull, get 75 free stocks when you sign up for Webull. I threw $1,000 in there, I get $7,000 now. I love their trading platform. This took the place of my sports betting as I just bet on stocks. I am far more successful in stocks than I am sports betting. So if you want my newsletter, it's right here. Everything is on Linktree. My newsletter, again, it's free during the week and paid on the weekends. So thank you to the paid subscribers for supporting me. If you listen to the podcast, I do ask, hey, if you made money off of my picks, give me a Venmo, a PayPal, or a Cash App. It's all here on Linktree. But I'd say just buy the newsletter. Get the newsletter, get something for your money. That's what I want you to do. I'd rather make money off of you buying the tools and teach you. I want to teach you to fish. I don't want to give you a fish. I want to teach you to fish. That's how you're going to make money. So, again, you're going to have to make your own decisions. Today looks like the Qs are up. Everything's looking good. Tesla's up 5% in the core portfolio. Disney's up 1% because it's been beaten down. Google is up 1% because it's been beaten down. Eli Lilly, which has seen tremendous weakness. Their earnings are coming up. If this is still around the 200-day and you have a buy signal from the algorithm before this earnings on August 7th next week, buy, as Jim Cramer says. Meta, just buy it under 500. Like I said, Nvidia's up 2%. We're gonna see how much these mega cap stocks are spending on their hardware, and that's all going to Nvidia. So you can see it. I mean, that's what's going to come out this week. You're going to see the movement. Qs are up 1%. Tesla's up 5%. Uber's up 1%. XLK is up 1%. XLY is up 1.52%. So my portfolio is probably doing pretty well. But if you have any questions, I will be back tomorrow morning. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.